Welcome to Wealth Matrix Crossroads, the channel where wealth meets strategy. Today, we're going to tackle a massive question. How does money actually move around the world? Now, forget what you think you know. We're about to pull back the curtain on the hidden machinery of global finance. And trust me, the reality is way more engineered and frankly more fascinating than you'd ever guess.
You know, we often picture money as this free-flowing force, kind of like water, just naturally finding its way to where the best opportunities are. But that's not really how it works at all. In reality, global capital is guided through some very specific and often totally invisible channels.
So let's start with a puzzle that has baffled economists for decades. It's called the Lucas paradox. Logically, right, you'd expect money to just pour from rich countries into poorer ones, because a single dollar of investment there could, in theory, generate much higher returns. But overwhelmingly, that's not what happens. So if capital isn't just chasing the biggest potential gains, where in the world is it going and what's guiding?
To answer that, let's start with the visible part of the system. What are the tangible things that attract all those trillions of dollars of private money from investors and big corporations across borders? Well, this chart reveals a really dramatic shift. For decades, things were pretty slow. But then, starting in the 1990s, private capital flows into developing nations absolutely exploded. And this surge was powered by two main types of money, something called foreign direct investment, or FDI, and portfolio investment.
So what's the difference between these two? Well, think of it this way. Foreign direct investment is boots-on-the-ground money. It's a company actually building a factory or an office or a data center. It's long-term, it's physical. Portfolio investment, on the other hand, is more like paper investment. It's buying stocks and bonds on a country's financial markets. It's often more short-term and it can move in and out way faster.
And here's what's so crucial. These two types of money are looking for completely different things. Research shows that FDI, that boots-on-the-ground money, is drawn to a country's physical infrastructure. Things like reliable electricity, good communication networks, solid roads. It needs the real world to be working properly. Portfolio investment, however, is attracted to financial infrastructure, strong credit markets, active stock exchanges, a sophisticated banking system. It needs the financial world to be humming.
But here's the twist. Just having the right kind of infrastructure isn't enough. Capital doesn't just appear out of thin air, right? It has to be channeled. And that requires a hidden architecture, a global network that directs where money can and cannot easily go. And this is where things get really, really interesting. So let's pull back the curtain on this invisible infrastructure. Honestly, the best way to think about it is like the world's financial plumbing, a super complex web of pipes, valves, and junctions that control the flow of all that capital we were just talking about. This whole system has a name. Researchers call it the Global Financial Network, or GFN. It's not one single organization, but a system of all these interconnected players. You've got the major financial hubs like New York and London, you've got the government setting the rules, and then you have an entire ecosystem of specialized firms, the lawyers, the accountants, the consultants, that make up what's called the FABS complex. Okay, let's quickly break that down. The financial centers are the actual cities where all the key players get together. The FABS complex, that's Finance, Accounting, and Business Services, are the expert firms that handle all the incredibly complex legal and financial paperwork. And, super important, world governments are the regulators who build, maintain, and ultimately backstop the entire system. Okay, so if this really is a plumbing system, where are the main pumping stations? And what about the specialized valves? Well, the answer reveals this fascinating division of labor within the network itself. See, the network operates through two types of hubs that work together perfectly. First, you have the big onshore centers like New York and London. These are the epicenters of market activity, liquidity, and innovation. But then you have the offshore jurisdictions, places like the Cayman Islands or Luxembourg. Their specialty isn't trading, but providing these hyper-efficient legal and tax structures for all that capital to flow through. They're really two sides of the same coin. And just look at this map. It shows you how unbelievably concentrated this network really is. This is not some decentralized web at all. We're talking trillions of dollars being funneled through just a tiny handful of jurisdictions. The US, the Netherlands, Luxembourg, and the UK are acting as these massive funnels, directing the vast majority of global capital. So the crucial point here is this. These so-called tax havens or offshore centers are not bugs in the system. They aren't some loophole that crafty financiers just stumbled upon by accident. No way. They are deliberately designed essential features of the global financial machine, created to perform a very specific and vital function inside the network. Okay, so this brings us to the final and maybe the most surprising piece of the whole puzzle. Who actually builds and maintains this entire system?
We tend to think of global finance as this stateless, free market thing, but the reality is the complete opposite.
I mean, listen to this quote from the book Sticky Power. Finance is, out of all sectors of the economy, probably the single most dependent on state support. It's states that create the laws, enforce the contracts, and provide the bailouts when there's a crisis. Far from being victims of global finance, powerful states are its chief architects, and they use this system for their own economic and political goals.
A perfect real-world example of this is China Mobile. The Chinese government wanted to build a global telecom giant. So what did they do? First, they created the state-owned National Champion. Then, to get access to global money and expertise, they listed it on the Hong Kong and New York stock exchanges. And how did they structure the whole thing? By using offshore entities in the British Virgin Islands for legal and tax efficiency. This is a state strategically plugging into every single part of the global financial network to get what it wants.
So after all that, what's the big takeaway here? What does this hidden architecture really mean for how the world works? The big takeaway is that money doesn't just flow, it's channeled. It moves through this global financial network that is highly concentrated in just a few key cities and jurisdictions. And this entire network isn't some force of nature, it's a human creation, actively built, backed, and used by the world's most powerful states to project their economic power. And this leads to a concept the authors call sticky power. Because this system is so deeply embedded, connecting the world's largest companies and most powerful governments, it is incredibly resilient. These financial institutions are literally built to last. Once they become indispensable, they're almost impossible to change or tear down.
Which leads us with a final, pretty provocative question. Now that we've seen the architecture, we've seen the power centers, and we've seen the architects, if the system is this entrenched, this powerful, this sticky, can it ever truly be changed? And what on earth would it take to build something different?
That's our explainer for today. Thanks so much for joining us here at Wealth Matrix Crossroads.
All right, let's do a super quick recap. We started with the puzzle of why capital doesn't just flow from rich to poor countries. We saw how different types of money are drawn to either physical or financial infrastructure. Then we uncovered that hidden global financial network, the complementary roles of its onshore and offshore hubs, and finally, the absolutely critical role of the state as its chief architect.
If you found this journey into the world's financial plumbing enlightening, please do us a favor and like, share, and subscribe for more. We are absolutely committed to bringing you enduring lessons and strategies about wealth and the world. We'll see you next time.